So, half an hour or so ago, the Chancellor of the Exchequer delivered his 2016 budget to the nation. I think, on the whole, it was a clever budget. I think it was well delivered, given the fact that he was hemmed in by some economic and, I would say, political constraints too. The economic constraints being the fact that we've seen this global slowdown in recent months, which is clearly going to impact on revenue generation for the government. And the political constraints are really twofold. One, Osborne, who is the Chancellor, of course, is a supporter of the UK staying in the EU, with the referendum now called for June 23rd. He was pretty keen not to upset too many members of his own party with unpopular measures. And secondly, of course, Osborne himself has got leadership ambitions. So political constraints too, and I think on the whole he managed it very well. In terms of the big figures, growth has been revised down this year to 2%. Just a few months ago, back in November last year, the forecast was for 2.4% growth. That's largely the international slowdown. Growth in subsequent years also revised down by 20 to 30 basis points. Inflation also revised down. No surprises in any of those numbers. It does, of course, impact on the level of debt that the UK is going to be running. Although nominal debt is going to be coming down still, debt to GDP will not reach Osborne's targets in the current year. He is, however, and as expected, sticking absolutely to his longer-term targets of running a fiscal surplus by 2020. What does that mean? He's going to have to cut spending by a further £3.5 billion, or about half of 1%. By then, he didn't give any specific measures there, but it's going to happen. He's sticking very much to those plans. So the big picture, no real surprises there. He then focused a lot of his budget on delivering certain manifesto commitments, on overturning some of the things that had been put in place by the coalition government when he was hemmed in a little bit by the coalition partner, the Liberal Democrats, and I think also encouraging enterprise, particularly at small business level. So there were quite a few measures there. I think some of the striking things were perhaps further clamp down on tax avoidance and tax evasion at corporate level. So a new restriction on debt interest relief for tax purposes for larger corporations. That will, of course, impact some of the more highly leveraged companies in the UK, such as REITs or infrastructure companies. So that was one, I think, notable, partly expected change. There were some I think really quite significant and helpful things for small business, which is demonstrating the commitment of the government to enterprise. There were some big commitments on infrastructure spending. It won't mean a lot of money being spent on the short term, but Crossrail 2 in London is going to go ahead. Big expenditure in due course on rail and road links in the north of the country, supporting the Chancellor's Northern Powerhouse initiative. So I think all of that will be helpful longer term. And then there were usual one or two sort of surprises that came out. I think the ones that really stick were, first of all, a big cut in capital gains tax, down by 10 percentage points, so a big cut. And I think that is a very clear commitment to enterprise. And then further increases in tax thresholds for personal allowances going up. And a big new initiative to increase savings. The tax-free savings allowance in ISAs is going to be increased very significantly to £20,000. That's an increase of about a third. And a new lifetime ISA allowance, partly funded by the government, going to be introduced for younger people, which I think helps to sort of begin to meet this savings crisis that the UK is facing and has been written about a lot recently. So overall, I think the big picture is very much as expected. The clear focus still on austerity, getting the budget into balance, and we're still looking at a surplus here by 2020 of £10 billion, so the Chancellor absolutely committed to that. And then quite a few sort of more micro initiatives, which will have some impacts at individual sector or company level, but overall are designed to improve the enterprise culture that this Chancellor has developed. So I think with the very difficult pack of cards that he had, he's delivered a pretty good budget, which I think will be popular with business generally, popular with most parts of the electorate, and importantly popular with his own party. So I would say he's done a pretty good job today.